Balancing a Checkbook, made by Mary Keating for TLT Tomorrow's Leaders Today. TLT Tomorrow's Leaders Today is a nonprofit organization dedicated to helping develop youth leaders through education, collaboration, and mentorships with community and business leaders for the collective benefit of the students in their communities. Thanks for joining us, and on to our presentation. First things first, what is a check? A check is basically a written note that you are giving to a person or a business, stating that you are allowing their bank to take out a specified amount of money from your banking account. Okay, so when do you use a check? Checks are typically not used for day-to-day purchases. Other tenders, such as cash, debit cards, or credit cards, are far more reasonable to use for your daily spending needs. Some examples of times you might use a check are when you're making a deposit on an apartment, a down payment on a house, to pay for some college tuitions, however, most colleges accept online payment now, or when you're sending money through the mail. Using a check allows you to create a paper trail. When you use a debit or a credit card, that paper trail is made when your banking institution gets charged and digitally moves the funds from your account to the payee's account. With cash, there is no way to form a paper trail that proves that the $100 you withdrew from your bank is the same $100 that the payee is putting into their bank. What are the parts of a check? Starting in the upper left-hand corner, we have your legal name. Next, we have the date which you are writing and signing the check. Next, you have the check number. This is already printed on your check for you. In the next box, we have where you are going to write out in digits the numerical amount that you are paying. Right underneath that, we have where you are going to sign your name. This is you formally giving the payee's bank permission to withdraw the amount specified from your account. To the left of that, we have the check number again. Make sure this matches the check number in the upper right-hand corner if you are accepting a check from somebody. If it doesn't, there's a good chance that somebody's trying to give you a fake check. To the left of that, we have your checking account number. To the left of that, we have your bank's routing number. To above that, we have where you can write a short description of what you bought or why you wrote this check. And finally, above that, we have where you're going to write out the dollar amount that you are paying. Here we have an example of a check that is filled out correctly. So we have John Smith, who on January 24th, 2021, paid the City Electric Company $122.00 for his January bill. So what about the other forms of payment that were mentioned earlier? We're going to be looking at debit cards versus credit cards. Debit cards and credit cards are both electronic forms of payment, and they can both be used to purchase items online. They both generally have the funds taken out of your account instantly. Debit cards, however, are your own money that you've already made. Credit cards are money that's being borrowed with the understanding that you have to pay it back by a specified date, and if you don't, then you're going to be paying interest on that borrowed money. So what are the parts of a debit and a credit card? Starting with the front in the upper left-hand corner, we have the name of your financial institution. Typically, it's somewhere along the top. Right below that, we have the chip. Most cards now have chips in them. This chip can be inserted into most POS machines to be read. The chip was introduced to debit and credit cards to help cut down on debit card fraud. Underneath that, we have the 16-digit number that is your debit or credit card number. This is part of the information you use when making purchases online, so be careful that you don't ever share this number with people. Right below that, we have your card's expiration date. Typically in month-year form, after this month, your card will no longer work. Your bank should send you a new card, or you can go into the bank in person and ask for a new updated card. Finally, in the bottom left-hand corner, this is where your real name goes. No nicknames here. Now, let's look at the back of the debit and credit card. So up first, we have your card's mag stripe. This used to be the main way debit and credit cards worked. This stripe would be ran through the POS system, and that is how your information was read by the machine. Most POS systems now require you to use the chip function. Below that in the box, we have where your signature goes. Make sure this is signed. Some retailers will match your paper signature or your ID signature to this box to make sure that you are not using your card fraudulently. Next to that, we have a 3 to 4 digit code that is called your CVV number. When making purchases online, retailers will commonly ask for this code as well. This is another layer of protection on your debit and credit card. Alright, so now that we've looked at what a debit card is, let's look at whether you should get one from a traditional bank or a credit union. Both credit unions and traditional banks are safe places to store your hard-earned cash. This is because both of these institutions are federally backed, meaning your money that is in your bank is guaranteed to be insured up to a certain dollar amount. Let's start by looking at banks. Banks are owned by investors. This means that they are for-profit and need to be able to generate income for their investors. Typically, they have more fees associated with having an account. They typically have higher interest payments if you take a loan through them. They tend to have better online interfaces than credit unions, and they tend to have more brick-and-mortar institutions and more ATMs. Credit unions, on the other hand, are owned by their members. This means they're not for-profit and focus more on their members' wants and needs. Typically, they do not offer as many financial services as banks do. They tend to have lower interest rates on loans than banks do. This is incredibly helpful when buying a car or a home. The fees for having a bank account tend to be lower or non-existent. Credit unions tend to focus more on their members' wants. So, what are the bank fees that were referred to in the last slide? There are a lot of different fees that banks will charge. Not all banks charge the same type of fees or the same dollar amount for these fees. That is why it is important to shop around for what bank you want to use. After all, the more in fees that you are paying, the less money you are retaining for yourself. Some common fees you might see are monthly maintenance or service fees, so this is typically a small monthly fee that is paid to use the bank's services. Overdraft fees. Some banks will allow you to go negative in your bank account. They let you borrow that money that you are overdrafting, but then will charge you a fee for allowing you to do this. You also owe them back the money that you overdraft your account by. Minimum balance fee. Some banks will require you to keep a certain amount of funds in your account. As mentioned in previous slides, banks are a business and they make money by using your money. So, if you don't have a guaranteed amount of money in your bank account, then they are not able to use your funds to further their business ventures. ATM fees. Banks will often have a surcharge to use ATMs to withdraw money. This is on top of the fee that the ATM company is going to charge you for using their ATM. However, if you use an in-network ATM, you can often avoid these charges. Excess withdrawal fee. If you are using a savings account, sometimes banks will charge you for withdrawing too many times from your account. This is to encourage you to keep your savings in the savings account. So what does interest mean? Interest is simply the cost of borrowing money. This is how interest works when the bank is paying it to you. When you put your money in a financial institution, you might see that you receive a small interest payment from the bank every month. This is the bank giving you money back as they have borrowed your money behind the scenes throughout the month for other projects. Don't fret though, if you ever need to withdraw your cash, it'll be there. Look below to see how interest works. Now that you know how interest works when you are getting paid it, we can look at how interest works when you are paying it to a company. So whether you are purchasing a house, a car, getting a student loan, or even just using a credit card, you are going to be paying interest in most cases. Sometimes you will even see this listed as APR, which means annual percentage rate instead of interest rate. Both of these phrases express the cost of the loan to the user on an annual basis, but APR tends to include other fees in its calculation. So now we can look at credit card statements. On the left-hand side of the screen, you'll see your statement of account activity. This is going to have your general information like your account number, previous balance, purchases, fees and interest, your subtotal, and your balance. On the right-hand side, we can see your payment information. This is going to include your new balance, the minimum payment, and your payment due date. Typically, they also give you a chart explaining the difference in paying a minimum balance versus more than your minimum. In addition to the information we saw on the last slide, you also should get an itemized transaction list. This is going to have in-detail descriptions of what you've purchased. These details are going to be the reference number, the transaction date, the description, and the amount. You'll also see a breakdown of your fees and interests. This is where you're going to want to check and make sure that every single thing on your itemized list is stuff that you actually made the purchase for. If you're looking at your credit card statement and you don't recognize one of those charges, immediately call your credit card company. You might have had your information stolen, and that could mean you're experiencing credit card fraud. Using the same mentality, if you ever notice an unfamiliar charge on your debit card's financial statement, you also need to call your bank or your credit union. So, how do I keep up with my debit card or your check purchases easily? You can keep track of your purchases in a register. This is commonly found in the back of checkbooks already, but you can generally ask your bank for a free one, or you can make your own in a journal or in Excel. TLT Tomorrow's Leaders Today is also going to be providing a link for you guys to download the one that is used in this example. Thank you for taking your time to learn with us today. You can learn more at tltleaders.org.